What's up, everybody? Stocks by the numbers. Welcome back. Today, I wanted to take a quick look here at Waste Management. Market's about to close in about 5 minutes. Been selling off since about 1 o'clock for the last 3 hours. And this one has actually been leading the way and consistently making new highs as of late because people do see value. But in my opinion, there are just a couple of things that I wanted you guys just to keep in the front of your mind. If you have a position or you're potentially considering wanting to start a new position in WM here, Waste Management Incorporated. As you see right now, stock trading, we'll call it $184 a share, down about a point and a half, 0.8%. Stock hit a new high today, 186.40, which it has been doing consistently. And let's look at some of the numbers here. So we have a market cap of about 74 billion, we'll call it. The company right now recently hiked their dividend about 7% up to $3. And we're yielding right now about 1.5%. We're trading about 33 times earnings right now. And we can see, I love that beta though. Again, the beta, the volatility of a stock in relation to the overall volatility of the market. As you see, beta 0.44, fantastic. The EPS and the revenue is actually, I don't want to say inconsistent, but we can just say unpredictable. But overall, the business actually looks pretty good over the years. We cannot deny it. Again, Waste Management, this is a sanitation company, garbage. And as you see over time here, the company has been growing very nicely. Now, we were kind of maintaining like that $15 billion level for a couple of years, as you see, going back to 2018, 14.9 billion, 15.46, 15.22 billion. Then for the last couple of years, you can see really taking the next leg higher there on the revenue side, 17.93 billion in 21, 19.7 billion, about a 33% increase in revenue from 2019, 2020 levels up to 19.7 billion here in 2022. And switching over here quarterly, we can see that we were at 508, 494, 489 billion. Then we popped and broke back up above that $5 billion benchmark, 5.12 billion, 5.2 billion. And similar to ISRG that we just looked at, we can see also that the profitability took a big chunk down, dropping from little over 12.5% down to a little over 10%. And then you can see it slowly climbing up here over the last couple of quarters throughout 2023 and tail end of coming off the bounce there at the low, tail end of 2022. So net margin jumping up to 10.9%, above 12, now 12.75% as of last quarter. But see, if we just look at the numbers, right, we can say the company did $20 billion in revenue back in 2022. We have a $74 billion market cap here. So we're trading what, like 3.7 times that total number? Not the craziest multiple we've ever seen, right? Less than a 33 PE could technically be viewed as high. However, markets really just consistently keep climbing for reasons kind of unbeknownst to me. But we do consistently keep climbing, so that's basically taking everything with it. But I will say that even at 3.6, 3.8 times annual revenue could still be viewed as undervalued and may possibly continue to climb over time here, just looking at the growth of the business, of course. But I wanted to show you guys the debt on this company. The debt is what is raising a red flag for me. Not necessarily, again, going to say that it's going to hinder the stock, really, but what it may do is have it slowly grow and accelerate, uh, potentially less than you would expect it to, if that kind of made sense. But as you see here, expecting for 2023, 20.4 billion for the year. Let's do some quick calculations here. So we have 489 billion and 512 billion. So that would be 10.01 billion, and that's 15.21 billion. 15.21 billion. Then if we switch out here, right, we can see, look at this. Look at this rage here. So this was when markets sold off, right? We hit the highs there, June, July, and then you can see we went on that sell-off there for a couple of months. The stock got pulled back to sub $150 a share, and then just went on an absolute beeline and was just consistently breaking up and hitting new 52-week highs consistently along the way. But last quarter, what I say, 15.21, so now we're at 20.4, we'll call it 20.4. And if we go back, I believe that's what they were projecting here. 20.4, right on the nose. So if the company reports in line or potentially above analyst expectations on the revenue side at least, we could potentially see a beat here on the yearly revenue estimate of 20.4 billion, which would be 3 out of the last 5 years. Not too bad. Looking at 2022 here, we had a slight miss, 0.2% though. And back here in 2019, we had another slight miss, 0.8%. So even when the company does miss, it does seem that they are missing lightly. This seems to be the biggest red that I can see as of late. Looking on the EPS side for the year of 2022, posting 559, analysts expecting 570, 2% miss. So actually there, going back to Q4 of 22. I love it. I see it right after I say it. But going back to Q4 of 2022, you can see an 8% miss roughly on the EPS side. But overall, it does seem to be a growing company, but I did want to look again at this debt here. And looking over the years, you can see 10 billion in debt roughly back in 2018, jumps up about 40% in 2019, almost 14 billion, breaks above 14 million, 14 and a third billion. 2021 sub 14 billion, 2022 15 and a half billion. And that, in my opinion, is a red flag, even though again the company is doing well and is more than likely going to continue to grow over time. You can see here Q3 2022 we're going back to, and we have debt slightly over 14 billion, jumps up to 15 and a half right there, stays above 15 here at 15.37, 15.37, 15.43. So the company does have that debt. That is definitely, that's what I'm saying. It's like if we look at the numbers again and we can say, oh, well, it's only trading a couple of times, yearly revenue, the stock, should be trading, 5 times, 7 times that number. Listen, of course, it is very well possible, but that's what I'm saying. Because of the debt that they're holding here on the balance sheet, I think that growth to get to 4.2, 4.5, 5 times yearly revenue. I just think it's going to take longer than expected. But I will say that a lot of the metrics that we look at do line up with what a good, solid, long-term investment, in my opinion anyway, should be doing, right? We have consistent increases on the dividend year over year, even going into and after 2020, which in my opinion is pretty key. As you see, going back 2018, paying out $1.86, 205, 218, 230, 260, and then recently, I think it was about a month ago here. Let's get some of the news here. Maintain a buy at Citi. As you see, raised price target, was already expecting a $200+ stock, increased it even more to 215. Maintain outperform at Oppenheimer. Boost the price target a couple of bucks there to 188, not bad. But there was raised a buy from hold. Okay, very nice. And we have Stifle coming out from 183 to 190, putting a buy on it. There was, here we go, hikes dividend, refreshes stock buyback, right? So as you see here, WM raises dividend 7.1%, authorizes 1.5 billion in buybacks, and that, in my opinion, is what's really accelerating these recent consistent 52-week highs, so to speak. The stock really has been staying up for a while, and this is why, because it has a very positive catalyst to kind of hold its support and hold its value, right? Because again, we could look at some numbers and we can say, well, this looks bad, so the stock could go down. Well, this looks good, the stock could go up. But again, the conclusion that the average investor comes to when they see news like this is that, well, if they're saying it's worth, a purchase of 1.5 billion at the current levels, then chances are over time they expect it to be worth even more, right? So that's why usually when a company announces a buyback of its own stock, it is a ridiculously overweighted positive catalyst, if you will, right? But not only do they announce the share buyback, but they approve a dividend raise, which again, consistently increasing the dividend. It's just going to make them more and more attractive, right? And all of the longer term financial advisors out there will now look at a situation like that and say, okay, this is, this is why this is a good long-term hold. This is why I bought it for you in your, ABC account. This is why I'm buying it for you now in your account. You understand what I'm saying? So it seems to be an actual solid, stable investment over time. But I did want to show you guys that debt because, holding 15 billion in debt could potentially hinder some growth here in the immediate short term, right? I'm not talking about down the road. I'm just talking about immediate short term because we do always talk about our pricing and timing. But as you see here in the short term, we actually have liabilities outweighing assets by roughly about 800 million. So on the longer term side, looks phenomenal, right? As you see, outweighing 28.29 billion on 20.59 billion. So you have a nice like $7.5–8 billion cushion right there on the long-term assets to liabilities. But yeah, in the short term, it could get rough. But cash from operating activities, as you see, back up to those. Well, obviously we're only seeing the last 7 or 8 quarters, but as you see, back to the highs it was towards Q1 of 2022. Cash from investing took a little bit of a dip, not the worst it's been. Cash from finance, a little bit of a dip. Okay. Free cash flow. Again, it really did chunk down from that 800 million mark, tried to hold that 400 million, and then dropped down to 187 million. However, they have been turning it around and consistently increasing that cash flow quarter over quarter, basically since the tail end of 2022. So, not a bad sign at all. Assets appeared to be consistently growing. You had a dip right there, but basically growing overall. And you can see they kind of have a slightly higher value of assets right now, basically in line with the same amount of liabilities they had going back to the end of 2022. So again, assets minus liabilities, that yields the equity. And we can see that as the equity has been climbing and then dipping and then starting to rebound, we can see that's basically the same reflection that we see in the book value per share. And we were above $17 per share for several quarters. And now you can see we dipped down to as low as $16.70. And now the last couple of quarters, we began to climb up and turn it around, sitting at 17.25 as of last quarter. So another potential red flag as well, right? Because now we're talking like 11 times book value, right? And this is similar to what we saw with Intuitive Surgical that we just looked at, right? They were also trading, I think, like 10–12 times book value. Intuitive Surgical, a little bit more consistent, and again, as we saw here with the annual revenue coming in, you can see, again, we don't want to say they necessarily plateaued, but let's just say they paused for a second before continuing higher and taking that next leg higher. And of course, again, 2020, 2021, that's when the hyperinflation really began to shoot up. And now you're seeing all of these companies have, a significantly higher increase in revenue now coming in throughout 21, 22, 23. So, these companies jacked up their prices really across the board. But the one thing that the reason why I bring it up is because going back to ISRG, when you look at the years even prior to that, 2016, 17, 18, the company was consistently rising like this, right? And again, not necessarily bashing Waste Management, but the book value per share comparison just reminded me of ISRG that we just looked at. But all right, whatever. But here we can see again, revenue gets above 5 billion, dips back down below, and now we jumped and took that slight next leg higher here, getting to 5.2 billion. Cost of goods was hanging out at about 3.6 billion in change. Now it just slightly broke into 3.7 billion, which isn't really the same proportionate increase in revenue as it is in cost of goods sold, right? And total revenue minus cost of goods sold again gives us our gross profit, and you can see that back here was 142 and dipped back down into the 1.3 billion, and now you can see for the last 2 quarters they started to climb that up a little bit, increase their profitability. 1.41 billion 2 quarters ago, 1.49 billion last quarter. Operating expenses are actually seeming to be slowly coming down, as we see. Came down from almost half a billion down to about 467 million, slightly back up to 470 million gross profit minus operating expenses yields operating income. And as you can see, the company has been maintaining positive operating income in the high hundreds of millions for several quarters, and now as of last quarter finally broke up above that $1 billion mark. So that's why I think, again, a couple of cons, if you will, compared to the pros, like the debt on the sheet or whatever. But at the same time, we do have things like this, where our profitability is starting to increase now and make that U-turn and start to climb up, which again yields to higher operating income, higher operating margins, right? And that's, again, the profitability ratio section. That's why I look at the fundamentals and not just at the technicals. And again, not bashing any technical day traders out there. But when we're talking about a longer term investment, these are the numbers that, in my opinion, are very relevant. But as you see, looking pretty good. Pretty good. But also, that's what I mean. See, it's certain things like this. If we look at the PE, if we go back to Q1 of 22, we can see the PE was up at one point to almost 35. Now the PE is sitting here just a touch below 33, right? So technically, if markets do continue to climb up and we continue to make new highs, probably going to take something like WM with it, and you will see probably 35, 36, 38 PE, in my opinion, maybe over the next just couple of weeks here. But on average, you can see before that was kind of sub 30, right? Even if it's holding that 29 to high 29 level, we're still potentially looking at a 7, 8, maybe 10% sell-off from this level, which again, if you're a longer term investor here, and this is one that you've been holding, you really shouldn't view it as a negative, as I always say, right? Because if we have a company that is consistently growing over the years, we're in a necessary industry, right? We're in waste. We're in a necessary industry. Profitability has been slowly increasing. And of course, again, not only do they consistently pay out a dividend and increase it to you, but of course, 1.5 billion share buyback, right? So that's why, again, it seems that we definitely have more positives than negatives here, in my opinion. But certain metrics, again, could potentially show us that we might just pull back a few bucks. And as we see here, price to sales up to almost 3 3/4. That's the highest it's been going back to March of 22. Price to cash flow now above 17, right? On average, it looks like it was holding between 14 and like 15. So now it's at 17. So that's the highest it's been going back to March of 22. This is why I'm saying we just could potentially start to drop down a little bit. But it does seem more undervalued and potentially less overextended than something like Intuitive Surgical, ISRG, that we just looked at. But again, on the flip side, this is Waste Management here on the New York Stock Exchange, and we're talking about ISRG, medical, tech on the NASDAQ, right? You know what I'm saying? So kind of, I again, you can't really group it up as, apples to oranges, but also at the same time, it does make a difference, obviously. But as we see here, price to book, right, was staying, looks like down here in the 9s, jumped up above 10, and then immediately kind of sold back, dropped back down to sub 9. Now it's sitting here at 10 3/4. So that also is the highest it's been since going back to March of 22. So that's why I'm just saying a couple of these numbers here at these highs, I'm not necessarily saying that it's unjustified, that the company hasn't quote unquote earned it. But in my opinion, just it because I'm telling you, it'll be a simple, 1 or 2 metrics like this that'll have the short traders, the short sellers and the put traders jump on it for a quick 1, 2, 3 day turnaround, and just kind of like pause that climb and cause that small correction, so to speak. You understand what I'm saying? But the profitability ratios here, this is what Discord going nuts here. This is what I wanted to show you guys, right? Because as we see the high here going back the last couple of quarters, return on assets 7.65, we're sitting here at 7.5. But I want to talk about the margins more importantly. But the return on equity up here climbed above 33%, right? Seems to be consistently increasing. Return on invested capital back up above 10 and 3/4, right? This high back here was 11.1% though, but give it some time. The gross margin percentage, see, this is what I'm saying. This was in the mid to high 27s, drops back down into the 26s, gets back to 27.5, and then boom, jumps up to 28.68, right? So we have, again, that was the low a couple of quarters ago that we looked at, even with the net margin percentage, right? Boom, right there. And then you can see 26.28, 26.59, 27.58, 28.68. So the gross margin percentage has been consistently climbing over the last several quarters, as with the operating margin percentage, which we looked at before when we looked at operating income, right? So we were sitting at about the 17% range, got as high as 18.5, drops down to 16.4, 16.8, 18.46, up to 19.64. So this is what I mean. The company, consistently maintaining or increasing revenue, turned around the profitability. Operating margins are consistently increasing. They increased dividends. They announced over $1 billion buyback. You understand what I'm saying? So the list of positives definitely outweighs the negatives. But again, I did just want to show you the couple of negatives that we could potentially have on the back burner that could cause a sell-off. Again, not going to be anything too intense in my opinion, but could pull back the stock a little bit. EBITDA, once again, earnings before interest, taxes, depreciation, amortization. And as you see here, kind of that high 27 to low 29 mark, and we're bouncing up and down there at that level. And you can see going back just the last couple of quarters was down to 28, broke below 28, up to over 29.25, now sitting at about 30.25. So that's the highest it's been going back the last several quarters. And the net margin percentage we looked at before, we see that it was kind of maintaining that 11 to as high as about 12.5%, drops back down to 10%, and then slowly begins to climb from that level, 10, 9, 12, 12.75 as of last quarter. Now, that's the highest it's been as well, going back to the last several quarters. So that's what I mean. These positives, in my opinion, are just outweighing these negatives. And that's why I think the volume keeps coming in, and you have the institutions, just kind of consistently taking their time, but they are, for the most part, seemingly consistently coming out, maintaining buy ratings, maintaining outperform ratings, and, maintaining or increasing their price targets slowly but surely over time. And that's why when we're talking about long-term investments, these are the types of situations, in my opinion, that should be for the longer-term portfolio. Again, we're not necessarily saying, oh, do I buy calls for Friday? Is it going to pop? Right? That's not what we're talking about right now. Because again, usually that is more about the technicals than the fundamentals. But we'll look at the technicals as well. But overall, I do like it. Again, consistent dividend increases never hurt anybody, especially if you do the DRIP. Again, the DRIP, that stands for the Dividend Reinvestment Program. So I have, 1,000 shares. They pay me out 3%. Instead of taking that money every 3 months, reinvest it into more shares. Now you have even more than the 1,000 shares you did. The next quarter they pay out a dividend, so you get a little bit more because you have a little bit more shares, and then you reinvest that money into even more shares, right? And so on and so forth. Compound investing. And again, I know everyone wants to trade, everyone wants to get rich quick, but I know for a fact, there are other even other YouTube channels out there where people break down with the compound calculator. Okay, if you just bought X amount of shares of this, every month, let's just say, boom, you turn around over 10, 15, 20 years. Now you have hundreds of thousands, a couple of million. So that's why, again, we all want to trade, and we all want like that consistent action, and let's have a good day. Let's make a couple of thousand, tens of thousands today. But again, at the same time, I still say, in my opinion, slow and steady wins the race. Because I'm not saying you don't know what you're doing, and I'm not saying you're not being successful doing trading and taking these speculative, risky plays and whatnot. Again, more power to you. I wish literally every single person watching this the best of luck. But as we see over the history of the market, it's time. That's what really grows the portfolio. It's time. Because we can all, nail a call. Holy crap, I just made 2,000%, 3,300% return. Fantastic. But again, is it consistent? And also, if you go too heavy and, the market turns or it doesn't work out right, or maybe you just read the chart wrong, all of a sudden you have 1, 2, 3 bad calls. Boom. You and I both know it can wipe you out like that. And again, I'm not wishing it on anybody, but just the fact that it is possible is why you have to do both, right? You have to do both, in my opinion. You take an account, you build it up from 10K to 100K, doing, naked calls and puts. But once you hit that 100K mark, like you're still going all in, no cash on hand, just still doing calls and like, you understand what I'm saying? You have to start trickling that money in and protect some of it and have it grow for you in the longer term. That way, if, heaven forbid, you do have a bad run, at least you still have something on the back burner working for you, growing for you, right? But anyway, going off on a tangent, just trying to be prudent here, it's in my nature. I'm just trying to be prudent. But as we see here, looking like maintaining and more growth here on the profitability side over the next 4 quarters. And we can see, looking quarterly, we can see the company only missed 2 out of 8 times. Looking back for the last 8 quarters here on the profitability side. And if we stretch out here, we can see that actually back-to-back years here for 21 and 22, the company actually slightly missed on the EPS side. Before that, they were rocking and rolling, beating on, 5 of the last 6 years prior to that. However, again, it does look like 2023 was a good year for the company, and I think they're going to finish strong. And you can see estimates here, 5.19 billion. We looked at it before, right? 20.4 should be right on the nose if they meet or even slightly beat that number. Should be about right on the nose there. And you can see that over time, even when they do miss, these are slight misses, as I was saying earlier. So, 0.2, 0.8%. So if they can keep the misses in line like that, but again, at the same time, they're also increasing the dividend for you as a shareholder, you can't really knock the company too much. And now with a share buyback, in my opinion, just makes it even better. But you can see, look at the forecasted growth here on the revenue over the next 3, 4, 5 years. As you see, 20.4, 21.6, 22.7, 24 and a quarter, we'll call it, right? So we're still expecting slow, steady, stable growth. And here for 2023, we did about 20 billion, and we turn around 2-3 years later, and you can see we're up to 24 and a quarter billion. Now, it doesn't seem like a big deal, but coming from, where we did to maintain this slow, steady, stable growth, and now from this 20 billion point level, we're still expecting roughly 25% more growth over the next couple of years. And again, it might not happen evenly every year. As you see, you have a slight jump, a little bit more, and then even more. But 25% over 3 years, even if you average it out, you're looking at like 8% growth in change year over year. That's definitely nothing to sneeze at, especially when we're talking about tens of billions, hundreds of billions of dollars. It's much more than you might realize. So, definitely a positive right there, looking at the forecast. And they're expecting to maintain and slightly grow. So we can't bash that at all. The Canadian markets, as we see, basically consistently increasing for the most part year over year, and only up slightly compared, especially when you compare it to the United States, but only up very slightly, right? Going from about 700 million to a little over 800 million. So what's that? Like 13%, 15% maybe, or something like that. But the United States, obviously, as you see, annual revenue up roughly 50% over the course of about that 6-year period. So, and again, that's almost staying in line, right? Because think about it, you're up 50% over 6 years. So if you did that 50% divided by 6 on average, you're getting about 8.25%, 8.33%, right? So that's what I mean. To see the growth of the business really overall, just kind of not only forecasting, but already showing kind of like that 7-8% steady growth. It can't be denied. It can't be denied. But let's look at the technicals real quick. right? So what am I looking at here? 1 year chart, we back this all up. We can see the stock has, again, the revenue chunked up from 2020 to 2021. So we had our dip there, 2020 during the lockdowns. You can see consolidation period, and then boom, it chunked up and took that next leg higher. And it appears to be consistently making higher lows and higher highs, which of course is bullish. But if we back it up, I might have to go all chart here. Yeah, see, I went all the way back to this low, February 1st, 1990, and just kind of brought it up there to the bottom of that body. It's looking like November 1st, 2012, which again connects to there. And that's why this right here, in my opinion, is our all-time all-time support trend line. And obviously, if it immediately chunk down here in the next 2-3 months, you can see we drop to about $1.50. Now, technically, percentage wise, that would be big, right? That would be like a 17-18% chunk. However, at the same time, really not that big of a deal, right? Especially looking at the long-term channel that we're in here, really on this up and up. And this all-time long-term ascending wedge could potentially come to fruition, right? And we could, randomly sometime midway second half of 2025, we could break and start to chunk back down to the low hundreds. But as of right now, if we break up above this channel, obviously we're going to be in uncharted waters and who knows what's going to happen. But even if we reject and we stay in this channel, you can see top of the range, up there to 190, 194, 198, 200, right? So that's why even seeing a channel like this with a potential drop in the future, shouldn't really be viewed as a negative, because whether the wedge forms and it drops at the apex or not, whether it happens or not, overall, you're seeing the growth and the direction of the company, right? That's what I wanted to show you guys. But here on the top line resistance, I went from, looks like the top on May 3rd, 1999, connecting to the tops there, November 1st, 21, and December 1st, 21. And you can see that's right where the stock basically closed right now. And this is our support trend line. Let me zoom a little bit closer here. Our shorter term support trend line. As you see, I went from the lows there, October 3rd, 2023, that bottom. And then markets began to actually, they were still selling off in October, but I guess the company just hit its bottom. But I just did from the bottom wick there, October 3rd, 2022 to October 24th, 2023. And that's why I feel like this should technically be short-term worst case scenario. And that's why immediately, if it rejects off of this resistance trend line and wants to like retest this 20-day, as you see, you'll be maybe like 178, high 178s, low 79s maybe by the time it starts to come back down. And if it does want to retest this fib and potentially test this support trend line, we're looking at about mid 176, 176, 63, 68, right? So again, would it suck if you buy it now and it drops to 168? Yeah, of course, I understand. However, chances are you're probably buying it for the long term. And like I always say, if I liked it at 184, I'm going to love it at 168, 178, 176. But either way, yeah, looking really good. Again, coming off that sell-off there throughout August, September, finding that bottom, and then just going on an absolute tear. I mean, the stock has been above its above the 20-day moving average since before Halloween, right? I mean, look at this. With a buffer zone to boot, right? Not even attempting to retest. So, of course, after a run like that, I mean, it could cool off and it could, start to sell off here. But either which way, it just really looks pretty solid to me, in my opinion. And if we look here on the daily, this is our top. Yeah, this is our long-term resistance trend line. And you can see, again, markets kind of sold off and continued downward here later in the afternoon. And you can see, just look at that fight right there. I mean, coming down to retest it, right, and then immediately bouncing. But we're talking, what, almost 11 a.m., and then we fast forward here, so we'll call it about 12:30 before it finally breaks 245, right? So it retested and bounced and kind of kept slowly consolidating back down to it, and then tried to fight and hold this level for almost 2.5 hours straight before finally breaking and dropping down, as you see here. But big volume coming in there towards the end of the day. But again, either which way, even if it does reject, as I mentioned here, even if it does reject and want to come back down here to the moving average or the fib here, bottom of this support trend line, you can see again, this may be worst case scenario here, 176. But again, we have to see what the markets do as well, because I'm sure a lot of that market pump was kind of helping out WM as well. So if markets do begin to potentially stagnate or maybe sell off over the course of the next 1 to 2 weeks, we could have it come back down, and then we're going to have to keep an eye on this trend line and see exactly where it closes and where it might potentially drop down to. I don't know if it'll go this low, but you understand what I'm saying. It'll potentially drop back down into the mid-lower 170s and test a new fib or something. So only time will tell. But technically breaking out right there is a very, very good sign. And not only did it test that line multiple times and then close above it, but it continued to climb even higher above that next fib, and again get to these highs of 186.40. So we could potentially just be getting ready to bounce right there. You understand what I'm saying? So anything can happen. So we have to see now if it chunks back down here to like the 181.5 level tomorrow, right? So if it retests this level here, then we could potentially see the 178 retest of the 20-day moving average. But again, we're getting ahead of ourselves. Much easier to react than it is to predict, right? That's what we always say. But let's switch over here to stock charts real quick, and I'll let you go. Yeah, just predominant white candles. Yeah, you got a handful of red days in there for WM, but for the most part, up and up. And right here, it was like mid-December where they announced dividend hike and 1.5 billion share authorization buyback. And you can see the stock, had an initial drop down back to the mid-Bollinger Band, but it's been staying above that basically since the rally there, late October. But you can see having that bounce and then just having that consistent growth, because again, the positives, I just feel the positives outweigh the negatives. And you look at a brand name company like that trading 3.7, 3.8 times 2022 yearly revenue. We have a PE, it could be viewed as high as like 34, 35, wherever it is. But, technically, if markets are going to consistently keep climbing, then we have to take this one with it as well, because it could be viewed as undervalued in the numbers. You understand what I'm saying? So that's their logic really behind this, in my opinion. But staying above that mid-Bollinger Band, and we can see here on the daily, mid-Bollinger Band drop would be about 180.40. And I said, right, what if we drop back down here, you're looking at like 181, 180.60, right? So that's why they might potentially drop it back down into that previous range where it was before it took another leg higher, and that'll be right around the mid-Bollinger Band there on the daily, and we'll see. But again, the 50-day moving average has climbed very nicely since that rally there, end of October, and we can see we went from, what is this, about 156. Now the 50-day moving average is up to 176.02. So pretty big move. And again, that serves now as a short-term support level for the stock. So we'll see if it does begin to sell off. We'll see if it has a bounce there off the 50-day, or if it breaks down and gets back to the 200-day. Because you can see before that, you can see multiple rejections off of the 50-day, right? And then since then, markets have been rallying. So again, not necessarily trying to take anything away from WM, but it had to move with the markets, right? So kind of hard to tell if it's going to be able to hold that 50-day if markets begin to sell off. But we'll cross that bridge when we get to it. RSI, as you see, was kind of topped out, but kept going, riding off of those positive catalysts, dividend hike, share buyback. And you can see today had a slight drop down, almost closing 1%, sitting here at about 66 2/3 on the RSI. So that's why we could have potentially another pop back up to like that 185 level, but then technically it might drop down and start to sell off. But time will tell. And we can see now, because of that red day, we have the potential flattening and curling of the MACD. So we'll have to keep an eye on that as well. Switching over here to the weekly, similar story, right? MACD obviously has been raging since October, but also we have our RSI now sitting above 70 here at 70.4. So that's why we could potentially top out. Bollinger Bands trumpeted, as I told you, when a stock pops or drops, the Bollinger Bands widen. And then as the stock trades, you can see it's slowly beginning to come back up and catch up with the stock. But here, it could be potentially viewed as overbought on the daily and on the weekly, as you see riding just the top of that Bollinger Band for a couple of months. So, I mean, of course, we could have the flash pop up to the top Bollinger Band on the weekly there of about 189.27, but I don't know if that's likely. I have a feeling that again, even if we don't drop, I just have a feeling, in my opinion, we could potentially pause here. And it just might take even a couple of days before we climb up a couple of bucks. But check the pivot points real quick, and then I'll let you guys go. Here on the weekly, again, you can see, right, top Bollinger Band on the weekly was 189.27. Top resistance level here, well, first level resistance on the weekly, you can see 190.69, right? So that 189, 190 level is going to be the next time they hit the pause button if the stock continues to climb. But we'll see what happens. Support level here at 168.21. That seems pretty low, but we are looking at the weekly. If we switch over here to the daily, we can see second resistance level up here at 185.57. The company goes almost a full point higher than that level. But then again, in its defense, the markets did begin to sell off, right, and start dropping down. So, for all we know, if markets stayed up, the company would have climbed and closed well above this resistance level. But you can see the day before it bounced up and closed, looks like right at it. What was that close right there? Closed 185.54. Resistance level 185.57, right? So technically you could say that it rejected and it should be bearish. But because the stock was hitting new highs and is in quote unquote uncharted waters, they tried to take it up a little bit more. But then, markets decided to make the U-turn, so they pulled it back down below that level. So that's why we could easily retest this resistance level here at 182.34. Obviously, that's 50 cents away. No, I'm sorry. That's $1.50 away. But here, I think right here is potentially, in my opinion, where we could see. Right, we have our pivot point here, as you see, 176.56, and now we also have our 50-day moving average there, 176.02. So let's see if we drop down and break this resistance level tomorrow or perhaps the next day. But yeah, a couple of things to keep an eye on. But overall, waste management, I mean, you're buying into garbage. Sometimes there's money in garbage, though, right? And I'll end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And, of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile, and they're very uncertain. So I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for stopping by. Catch you guys in the next one.